What you are about to watch is my friend and business partner Thomas doing a weekly recap of the VIP signals from the FCI company. So if you guys don't already know, the VIP signals is a service that the FCI company offers. It is a very affordable and very effective service. And this recap is pretty much going to be where they break down the trades from the week to see, how much money could you have made, what were the winning trades we took, the losing trades, as well as the technical analysis. So if you are interested in joining the VIP Signals group, send me a DM on Instagram and we'll get you started. The prices are literally as low as $100 a month, so it takes literally nothing to start, and you can start making money instantly. It takes literally potentially even one trade to make back your $100 per month entry. And again, if you are interested, send me a DM. And without further ado, let's get right into the video.
All right, everybody, welcome to the 4th episode of our VIP weekly signals recaps. So again, you guys already know how this series is going to go. We're going to break down all of the juicy trades we had this week. We're going to break down all the losses we had this week, and we're going to give you guys another peek into my personal trading plan and how exactly I approach the markets on a week-to-week basis. So before I get into any of that really quickly here, not so quickly, I want to cover the actual recap from this week. I want you guys to take a good look at the losses we had this week. I want you guys to take a good look at the wins we had this week. And I want you guys to really, understand how important your risk management plan is. Now, why exactly is that, you may ask? Well, I know that a lot of you don't actually take the Invst trades on your live account, and that's simply because a lot of you guys don't have the necessary capital to safely trade these pairs. Not saying you guys can't trade these pairs at all. Again, I'm not the owner of your accounts. You can do whatever the hell you want. But at the end of the day, I'm going to recommend where you guys should trade, where you should put your money if you have the required capital to do so safely. So, with that said and understood, I know the majority of you guys take the currency trades, and my oh my, did we have a interesting week here. We walked away with about 4 pips total. Now, just take that in for a second. We walked away with 4 pips. We only won 4 out of the trades. You can count 5 if you want to count the currently active AUD JPY trade. But with that said, we walked away with 4 winning trades. Now, why exactly that, you may ask? That's my fault. I can't even really sugarcoat it. I messed up this week. I had a very poor performance week on the FOREX trades. We're going to break that down in a bit here, where exactly my mindset was going into this week. But I want you guys to really understand that we only won 8 trades this week. Only won 8 out of the 20 trades taken this week. 40% trade accuracy, but we still walked away with 426 pips. 4 pips in the currency channel, 422 pips on the Invst channel. This goes to show you how important your risk management plan actually is. Your risk management plan is going to keep you in this game long term. It's going to keep you profitable, and it's going to keep you winning on a week-to-week basis, regardless of whether or not you've lost the majority of your trades. We lost 1, 2, 3, 4, 5, 6, 7, 8 trades on the currency channel. Won 4 trades, potentially won 5. We only won 50% of those trades. This goes to show you your risk management plan is going to keep you winning on a week-to-week basis. It's going to show you that your risk management plan needs to be set perfectly, because again, I only won 50% of the trades if you're just talking the FOREX channel. And I walked away with 4 pips. That's about $40. So what I'm getting at here is you need to have a proper risk management plan. Because if you saw my post on my story on Instagram earlier in the week, I talked about how much money I lost starting off in the FOREX. I lost well over $2,000 coming into this FOREX journey trying to make money. I was prepared to lose money. Every week I come in, I'm prepared to lose money. I got 2 DMs asking me why I kept trading even though I had such a huge losing streak on the FOREX channel. The reason I kept trading is because my risk management plan was set. I came in here wanting to make money, which I did. I walked away with 4 pips. 4 pips is 4 pips. I'm not saying it's impressive, but it was still 4 pips profit. So why did I keep trading? Why did I stop being afraid of losing money? Because my risk management plan is set to make me win even when I lose. My risk management plan is set to only provide a certain amount of risk going into the trades. That means my ROI coming into each day is set to make me win even when I lose. So the whole thing I'm getting at here is your risk management plan comes first. Defense before offense. If you have a risk management plan that you think is it's okay, it could be better, message me. We'll go over it really quickly. It won't take too long, 10 minutes at most. We'll get that set straight. So with that whole little rant over with, I want to quickly get into this video with you guys. It's going to be kind of a longer video here. You guys can tell by just the intro, it's going to be kind of a long video. So, get comfortable, get yourself something to drink, something to eat, get your notebook out if you want. I recommend it. You're going to learn some stuff, maybe not. But regardless, we're going to break down each of the trades. You're going to see my little losing streak here. And we're going to go over the winning trades as well. So, again, get comfortable. And I'll see you in the very first trade. All right. Get my coffee out of the way here. All right. Hopping into our very first pair here, we had two sell-offs on NZD USD, the New Zealand dollar versus the US dollar. And off the bat, we're going to hop right into the 12-hour, which is where the majority of my opinion on this market, on the direction of this market came from. So if I were to hide all of this material over here on the right side, I did see a nice sell-off position. Market is currently in a very high position on the higher time frames, right at a nice area of resistance. Now, prior to this, the market was in a lower position. But if we're going based on the actual entry of the market, which is right where my tick is on the chart, right about there, we had a nice sell-off in an area of resistance and former support. Further on to the left, you see another area of support on the bottom V of the M. So the middle portion of the M, nice area of support once again. So I was expecting the overall sell-off on the market. Of course, I was incorrect. Market chose to push higher into the bulls, smashing our stop loss long term. So two positions on a sell. One was at market execution. One was higher at our limit. Market broke right through, hitting a higher area of resistance. So I'm gonna get my arrow here for you guys. Actually, I need to get arrow there, and then I can get my arrow. So again, entered into a sell, entered into a lower sell position as well. I didn't think that the market was going to push much higher than the secondary resistance. That's why I chose to sell off at market execution. Once it spiked our sell limit once again, the market continued to push higher and higher into our stop zone. So it spiked the secondary long-term resistance, nice coinciding with the former areas of sell-off positions. Market broke back down into our entry price. And this is exactly where I thought the market was going to be in a nice, beautiful sell position. Of course, I was wrong once again. Market pushed back up, hitting that secondary resistance once again, and then dumping off on a nice retracement to a secondary support. Market pushed even higher, hitting the new zone high. So this did dodge our stop loss, and I was very, very confident. I was very happy as well. I was like, you know what? It's pushing the highest point it's been at prior to this. We're fine. It's going to sell off again, which I was right. It did sell off once again before shooting right back up to slap our stop loss. So what does this mean? It means two things. I was very ignorant in terms of the new zone highs. I let it beat out the previous zone high, which is why I marked it up once again. I was confident in marrying this trade. I was so confident that this trade was going to sell off that I just chose to hold it. I could have cut our losses short on the pullback, but I didn't. And what does that tell you? It tells me that at the moment I was I was too confident in the trade, for one. And two, I let the trade break the zone high, which, mind you, was inside our stop loss. Once it broke that zone high and it retraced, I could have closed it to cut cut off partial losses and saved up, that extra capital. But I chose to let it run. So again, going forward, if it breaks the zone high and your stop loss is outside the zone high, you might want to consider cutting out. So again, the reason behind this trade was a long-term sell-off opportunity on the 12-hour. As you can see, we're in a very high position. You can expect a dump off anytime next week, because we do have a nice head and shoulders pattern forming. It's respecting the current zone high, well, the previous zone high. The new current zone high is up here. And 2, we have a nice head and shoulders confirmation that I just mentioned, as well as coinciding with the new zone high on the 12-hour. So again, long-term sell position, entered a little bit too early, disregarded the zone high breakage on the 1-hour, and I chose to ride out the trade, hoping for it to return back to our entry price. So that's 60 pips right there that we lost on the trade. A little bit of ignorance on my behalf. So going forward, we're going to hop into Eur Jpy. So hopping right into Eur Jpy, we are going to take a look at the 4-hour chart. You guys can see here we have a nice uptrending wedge pattern formation with nice key areas of zone support and resistance. I'm going to actually delete this trade right off of here, just so I can clear up the chart a bit for you guys. You guys can see here that markup was incorrect as well. Eur Jpy is a relatively tough pair to keep tabs on. So again, wedge pattern uptrending formation, nice breakthrough. Market hit new zone low and zone high, pushed back up to our stop loss, to our sell limit, triggered our sell limit, and within that 4-hour candle, it had triggered our stops. So going into the 1-hour chart, I'm going to give you guys a nice little breakdown here for you. So why exactly did I place my entry price where it was set at 124.45? Reason for that is simply because along our entry price, we have a nice area of zone respected resistance, 2 touches to the key support, and a nice area of high traffic. So 124.45 was a nice price zone, a very attainable price zone to say the least, a nice area where I expect the market to hit. And although I was correct, the market pushed up past our sell limit with a nice bullish vector, 3 bullish vectors to the high, slapping our stop loss and respecting the previous wedge pattern support. So 2 things here. The first one being I did not expect the market to retest the wedge pattern support, and 2, I did not expect the break on the key support and resistance. Now, why exactly did I not expect the break? Well, prior to our actual trade's execution, prior to the price point being triggered along the market had respected that area of support. Well, former support, new resistance. It had respected that zone 3 times before it was actually triggered on our behalf. So I did not expect the market to trigger that zone, or once our settlement order was actually triggered. So again, a false claim on my behalf. I didn't expect the market to break that zone, and I did not expect the market to actually retest the former support. So again, an easy stop out on our behalf. As you guys can see, the market did stop us out before returning back into profit, and the market did drop off about 104 pips on that actual trade. So again, it was a stop hunt from the market maker. We were stopped out, and it was a stop hunt on our behalf, and it was a painful one to say the least. So going on from this, we are going to hop right into our next trade, which is going to be Eur Gbp, 2 sell-offs on Eur Gbp. So we'll be right back with that. Well, look at Eur Gbp. This is also a painful trade. Off the bat, just big pain in my ass. But going on and continuing with the breakdowns, you guys can see here this was a consistent resistance sell-off point. So that would be the leading factor towards our trade execution. Top into the 1 hour here quickly. A nice area of sell-off resistance. This was the original zone sell high. Market approached the price point of 91.11. Sold off heavily, forming the new zone low. Market pushed back up several times. And these vector wicks right here are the selling point for my entry zone. Why exactly is that, you may say? I expected the market to have a nice push for the 0.9100 sell-off zone. Market pushed back down once again, approaching that new formed support. Market pushes up a third time, and this is where I place my entry price. Market consolidates for a little bit. This is giving me more confirmation that we are in a nice sell-off opportunity. The market's ultimately trying to figure out where exactly it wants to go. With that said, market approaches our sell-off opportunity and immediately enters profit. Now this is giving me the confirmations, okay, we're on the nice selling side of this opportunity. The market's going to push lower and we are in a nice profitable position. Market has one huge vector to the high, two more vectors follow that, and boom, slaps both of our selling off orders. Huge pain in my ass to say the least. And we push up high. Market starts to respect the former resistance as new support. Peaks the new zone high of 91.48, which is where I'm going to move our marker to right now. And sells off again and then pushes for our take profit. Sold off for about 87 pips total. A little bit of an early entry. Market decides to push higher than the key sell-off zones, and this is just how the market maker is going to stress you out. It's going to annoy you. Don't want to get too extra with that, just a little, a little bit of expressive thoughts. But again, market sold off higher than the initial sell point, and I cannot do anything about that. So you guys can see my initial analysis here. A nice sell-off from a key area of support, key area of resistance, as well as a high trafficking order area. So nice little zone trade. Market sold off higher than the initial sell-off point and proceeded to push for our take profit. So with that said, we are going to hop into our next trade, which is GBP NZD. GBP NZD 1 hour time frame. Beautiful area of support and resistance along with accumulation phases. Nice accumulation phase before the bullish uptake. So what exactly was I going for this trade? Now, I love to trade pullbacks. I love to trade retracements. And based off of this trade order itself, we had a nice uptrending forming along the support zone. Market pushed above the support zone after a huge area of consolidation, huge area of accumulation to grab more orders. Market pushed bullish. And off of the retracement, I was expecting a nice dump off back to return to that accumulation zone. But that was not the case. Market came really close to it, which actually came close to our entry order. But the market pushed up once again. Huge bullish push. Damn, that was a little mess up there. Nice little push of about 184 pips. So there's a huge order right there. Huge push off of the bullish uptake. Market dumped down once again. And my mistake on this pair, my mistake on this trade would have been to not delete the order right away. I was going to look at deleting the order, but my confidence led me otherwise. I expected the market to just trigger off this entry price once again and reverse back up for about 80 to 100 pips. But I was sadly mistaken. The market pushed right through off of a bearish drive, accumulating along the entry price once again, leading me to believe that we're going to see another reversal. But the market ultimately decided to dump off and slap our 30 pip stop loss in the face. So huge mistake on my part. And actually this accumulation phase is acting like an area of resistance now. So I'm going to drag that over there. You guys can see that right there. Dump off, retracement, and immediate respect once again. So I'm correct with that area of 95.90 being a key zone of price action. But with that said, my mistake was not deleting the order off of that retracement. But once again, you win some, you lose some. We're going to jump into the next trade, which is CHF Jpy. So we'll see you back in a moment. Got some big money moves with CHF Jpy. So where was the exact markup going into this trade? We're going to open up the 12-hour chart here. As you guys know, I don't use the daily chart. I find it's too vague to get an actual reading of the charts. There's too much going on inside those single candles for me to actually get a proper reading. Now, not to say the 12 hours is too much better, but if you're going to look at a chart, you want to see at least, the overall halves of that day. You want to see 5 o'clock going in, 5 o'clock going out. You want to see an actual insider look on what's actually going inside those daily candles. So the daily candles, again, it's one candle, it's too vague. The 12-hour gives me a little bit more of a reading of the momentum going into that day and the momentum coming out. So that's why I use the 12-hour candles. But enough about 12-hour candles, going a little bit too far into that. But the 12-hour overall gave me a reading of not only a downtrend pattern forming here, you can actually drive that back a little bit. Get that marked up there. But we also had a nice key area along the 116.21 zone. So inside this area, we have a nice area of reversal support. Nice little break down here, break back up. That invalidates. These two breaks counter each other out. Nice little push above again. Nice area of support. Markets moving inside of these price zones. Nice breakthrough once again. Consistent respect to that price point. Market reverses back down once again. Nice area of support inside this 114.85 zone. Markets being heavily respected on both ends. Price pushes up once again. Once we're inside that price zone, we waited for the dip off of the daily. So if we open up the 4-hour right here, nice little dip above, trying to test the bullish support going into that downtrend. Once we had the respect and enough notice on our end, that's when we placed our entry off of a nice little retracement here. And we had a huge market sell-off dump right back down. So the overall break going into this trade, the overall analysis going into the 12-hour, downtrend pattern forming, markets in a higher price zone on the daily. If you were to zoom in on the daily, you'd see the higher price zone. 12-hour gives you that nice little overreading. We have a nice little high push into the price zones, along with the consistent respect of the 116.27 zone. So with that said, price sold off. We dumped at about 103 pips, 104 pips. If you get a nice little reading here, about 104 pips total, 103 pips. We got right back out off of the reversal and we cashed out on that trade. Now this trade was held for about, let's get a reading here, candle in, about 1 day and 2 hours, 26 hours total. So again, this trade was a little bit of an intraday trade. Held it for quite a while, but it was well worth the wait. The charges were not that big of a deal at all. I cashed out personally about $800 on this trade. The swap fees were about 16 bucks. Nothing to worry about. But nonetheless, a beautiful, beautiful trade. Perfect execution. We waited just enough time for that trade to test the bulls before getting on the bearish sell-off. So hopping into our next trade was another loss, 40 pips on Gbp Usd. Going into Gbp USD, I do need to remark up the highs and lows. We got a little bit of a messy chart here. But going into this trade itself, it was a sell position off of a nice area of support and resistance. A nice new consistent zone that had been formed off of a potential downtrend. Key area of support on the lows, which is where our take profit zone was set for 200 pips. Price approached this zone several times. I expected the third touch to be no different than the first, with a nice wick to the high before a sell-off position. But as you can see here, the market broke right through with the energy from the bulls, slapping our stop loss of about 40 pips before reversing back down. So that buy opportunity was a nice buy for about 250 pips to spike our stop loss. Market sold off immediately after and is now looking to respect this downtrend as new support. So again, quick breakdown of why exactly this market hit the stops. The nice huge pushes off of the 4-hour going to the 1-hour chart. I want to quickly show you guys just how fast this market had slapped our stops. This was a huge consistent zone of support and resistance. Market pushed up one huge wick high, approaching our entry price. Little area of consolidation here. Market pushed up even higher. So I want to give you guys a nice look at this. Huge candle, little area of consolidation, pushed one huge candle to slap our stop loss. So again, market had been toying with us for quite a bit, sold off higher than the initial sell zone. So that's the market maker faking us out and giving us false sell zones. So again, going in this trade next week, I'm expecting the market to look at a nice buy opportunity here above that area of former resistance and acting as new support. So again, going into next week, looking at a buy opportunity here, but with this overall trade itself, fake off sell zone, market maker took our money. So With that said, we're gonna hop into the next trade. Another another buy stop loss slap on AUD NZD, and then after that we have 3 winning trades back to back to back. So we're gonna hop right into that. This AUD NZD trade was another 12-hour and 4-hour markup. Coming onto the 12-hour here, we can see an immediate downtrend pattern formation. Very clean, very consistent, followed by a bottom uptrend forming a small but very important wedge pattern breakout. So along with this breakout opportunity here, typically when it comes to breakouts, we are expecting a minor retracement to the bears to pull back and grab more orders, fake out buyers, before ultimately taking out and pushing for a second bullish breakout. So upon a immediate bull breakout, you can expect a retracement followed by a second push to the highs. So with this trade here, we had multiple confirmations, multiple confluences going into it. We're gonna hop into the 4-hour here to give you guys a closer look. Where I have my entry price marked up, I'm actually gonna grab this quickly just to give you guys a better look. Where they had the entry price, we had the downtrend pattern, we had the uptrend as well as the support and form resistance. Regardless, it was a high traffic area, all come together at one point at 0.798 or 0.8 if you want to call it that. I expected the small retracement upon the bullish push to come back and follow up with a second push to the bullish highs, but I was sorely mistaken. We had an indecision candle form followed by 2 4-hour pushes to the stop loss zone. So again, partial mistake on my part. I did expect a secondary pullback to form the secondary push, but I was sorely mistaken. The market had just decided to push into the bearish direction and have one heavy sell-off. So that sell-off was about 135 pips strong. A nice missed buy opportunity in my opinion. The market should have followed up with a second push to the highs, but that was not the case here. The market maker wanted to completely dump off and fake out the retracement buyers. So nothing as far as in-depth goes to explain that, but it was a heavy mistake on my behalf. Both support zones missed out and fell right through, ultimately pushing into a seller's opportunity. So with that said, we're going to wrap it up on AUD NZD and jump into the last 2 sells on Eur Jpy, followed by a breakdown on EU before we hop into the indice trades. So we'll see you there in one moment. Jumping right into Eur Jpy, we're going to hop into the 4-hour time frame, as this was a nice 4-hour markup based off of our previous stop loss order. So getting into this, we had a nice sell-off opportunity forming off of the 4-hour retracement. So by retracement, I mean the market had respected the trend line on our previous trade. Market sold off. This technically did form a nice breakout opportunity from a previous accumulation phase. So I expected a nice retracement to come off of this previous dump. So we had a nice area of former support, new resistance. Market accumulated and consolidated along that zone heavily, and I wanted to get in on the second breakout pattern. So I'm gonna delete this trend line actually and show you guys, this is the accumulation box I'm talking about. Market broke out once again before retracing a second time. That second retracement did trigger our sell opportunity on the second order, and this came off of spread from my broker Vantage. Yes, I'm still on Vantage, even though I do have a CMC market account open. I'm just trading with the current Vantage capital I have now, just until the markets actually close and have to withdraw my money. So again, on Vantage, the market order did activate, and we capped about 70 pips total on both orders, 40 pips on the limit, 30 pips on the market execution. And again, this is a second retracement. This second retracement is always expected off of breakout patterns. Hence my entry on the second order. I wanted to get the retracement off of the initial dump, as well as the retracement on the secondary dump, which is considered the retracement on the first order. So it's just a retracement inside of a retracement. It's a little bit confusing, but again, it did its job. It made back the money from the previous order, and we walked away with 70 pips total. I did close out off of this small wick, this huge wick, and that's simply because it correlated with the previous support from the previous buy opportunity off of another accumulation zone. So again, very clean trade on both orders, very, very straightforward. We're going to wrap up this markup and jump into our last markup of the Forex currency section, which is Eur USD, totaling about 80 pips off of a sell opportunity. So we're going to jump right into that right now. And lastly, to wrap up our Forex section of this breakdown, we are looking at Eur USD. This is a secondary sell-off coming out of the market high. So market high being the new zone high of 1880 or 1880 if you want to call it that. Market initially sold off and made a small pullback, forming a relatively ugly head and shoulders pattern along an area of resistance. So once the market hit the resistance, I placed our sell opportunity. Market dumped off. I expected a little pullback off of this area of support, but the market completely fell right through and respected it as new resistance, therefore giving sellers more momentum, funneling into that nice bearish dump. So again, very, very clean opportunity. I placed my entry at 186, and that was simply because that was the lower level of market traffic where the price was hitting consistently. A little bit above that and the market wasn't going to do too much damage, but a little bit below and we get inside this nice area of consistent market traffic. So market sold off again, fell under, acted as new resistance, and dumped off even further, doing about 80 pips, which is where I decided to close off this trade. And that's all simply because I saw this lower level of resistance acting as potential support. So if you see that right there, that's my reason for closing. And as you can see, the market did reverse right back up after. So again, a really nice trade, 80 pips, very clean, very quick into profit as well. This chart never really reversed back up into a drawdown. That's going to quickly wrap up this Forex section. Again, a lot of these markups are very simple, very straightforward. And I know a lot of you who trade similarly to me or work with Carlos and I personally are going to see how we mark these up and how we actually enter these trades in very, very simply and very quickly. But for those who are learning, these videos are for you, and you guys are going to get a closer look into my personal trading plan. So with that said, we're going to hop into the Invst/gold channel. And this is where we made most of our money this week, because again, we did have a lot of messiness going on inside our Forex channel, or the currencies channel if you want to call it that. You guys already saw the intro, you guys already know about that. But again, for those of you who forgot, the indices is where we make the big money. This is where you're going to make your coin trading Forex. So let's get right into it. To these SPX trades, we took about 3 trades on SPX and then 3 trades on gold. So we're going to open up SPX right now. And you're going to see that off of our first initial buy on SPX, we did profit and then missed out because the trade spiked our stop loss. So we're going to open that quickly here. You guys can see here we did buy off of a consistent area of support. Former resistance, consistent support, respecting since October 8th. A second touch on October 15th for a few hours before it surged back up into profit off of a buy. Market moved back down off of a consistent downtrend that had started to begin forming on October 12th. But market moved back down towards our buy zone, which is inside our support. Also following a 4-hour and 1-hour uptrend starting from September 30th. So going into our actual buy, market had spiked low, respecting the uptrend once again, following a break above the support, which is where we placed our entry. Market moved up in a profit very, very shortly, couple $100 based on my lot size and position entry, and moving back down to spike our stop loss before surging up once again. So if the market had not spiked our stop loss, and if I had decided to move our stop loss up into the 100 pip range, actually 100 pips would have actually spiked the stops. If we had moved it to 110, we would have been inside this trade and profited approximately from entry point 327 pips. So the biggest mistake on this pair was 1, keeping a tighter stop loss, and 2, basing my entry a little bit above that respected support zone. So off of the buy, we did lose 72 pips, but I could have kept profit based on whether or not I extended my stop loss to about 110, 115 pips and widened our take profit. But Aside from that, going into the 2 sell opportunities we took, we did about 600 pips total from selling SPX. 2 entry points that we did place being at 34.59, 34.60, based on the respected downtrend that is beginning to form on the market, as well as the consistent former support, new resistance. Continuing into the respected resistance, we did have 3 direct touches. The first respecting the newfound downtrend, and the second was a direct touch to the resistance. So we had the first sell-off opportunity, market came down, respected the trend line, market approached entry once again, placed the second entry point, and the market began to sell off and sink below the respected downtrend. Now, as the market approached the respected downtrend, that is when I decided to figure out in regards to whether or not the market is going to reverse back above. Once the market closed below, that's when we continued to ride the market down to about 34.10. So these SPX trades were very based on market patterns and identifying market setups. Once you begin to get familiar with how the markets form, downtrends, uptrends, coinciding with areas of resistance and key zone usages, that's when you're able to really identify the volumes inside the SPX and indice trades. Now, in regards to SPX specifically, this actually does apply to NAS 100 because NAS is very, very similar. US 30 is kind of its own brand. It from time to time it does correlate with NAS 100, but US 30 is its own beast in itself. So in regards to SPX and NAS 100 respectively, they do form off of key candlestick patterns. You need to identify wedge patterns, which are big, as well as accumulation breakouts. So again, those are the 2 key points I want to give you guys. They are very focused on volumes and acquiring high levels of orders. But when it comes to trading them respectively, you need to identify market patterns. More so aside from key price action that I use along with currencies. So I don't want to confuse you guys too much. But with that said, we did about 600 pips on SPX. 500 if you're counting the loss from 72 pips. We're going to wrap up this indice trade breakdown quickly because we're going to hop into our last section, which is the gold trades from earlier. So we're going to jump into that right about now. Lastly, getting into gold here. Let me just open up the chart for you guys. Oh man, this is messy. I really need to clean this up going forward later. But again, jumping into gold, we did have 3 orders. The first one being a nice gold sell opportunity. We did make about 70 pips. This was the only profitable gold trade. And I want to point out one thing here. I was a little jumpy earlier this week, which is why I entered the gold buy opportunity. But you guys can see it did sink off quite a bit. So I don't want to really talk about that. It's a little upsetting. No. But in all seriousness, we did make a nice gold sell opportunity here. Made about $600 based on the gold sell, based almost entirely off of the gold peak that we had from this week at about 1930. You guys can see here we peaked off from the previous weeks as well. So gold is really lining up into a respective 1930 range, really making do with working under that zone. Gold completely sold off. It was a wick entry. And the reason for the gold closure was this area of support. This was a very, very indecisive zone for me coming into gold completely, just because when it comes to gold volumes and accumulation phases, they are typically aimed at as gold reversal zones. So that's a tip I want you guys going forward. I'm going to give you guys that one. Gold is very based on high volume accumulation zones. This is a high volume accumulation zone. These areas typically act as areas of support and resistance. Hence my closure at the 1920 zone, about 100 pips under our actual entry. I closed here based on an area of support. Market, of course, broke down right through, and this is a bad example because the zone broke, but I want you guys to keep that idea going forward. High accumulation areas act as support. Right here, right here, right here. Keep that going forward. Anyways, we did place the buy and the gold broke right through, reversed under. Look at that. What's that high area accumulation zone? Gold broke above and then crashed again right under. So again, we closed off of an area of support. Gold broke under, respected it after as new resistance and moved below again. So imagine if we had opened this up. Whew, my God, that'd have been a lot of money. But we did not do so, and I paid the price. Dropped the ball, 71 pips right there. Gold moved up again, crashed under, looked for a buy opportunity, and we did make profit. I want to say that right now, we did make profit. We entered a little late. Avoiding that wick zone, stop loss was just inside that wick. We profited about 100 pips before gold sunk right back under. I made the mistake of not moving our stop loss in time. That was my mistake completely. I was asleep at that time. I typically don't do that, but again, shit happens. You win some, you lose some. I missed out on that trade. I know a lot of you cashed out. I'm going to shout out, I think his name, not his name, but I think it was Razik that closed out in profit. It might have been Yuns as well. I want to shout out those two guys. They've been working hard, working their ass off. Those two guys, I believe, cashed out on the gold buy. If not, then I'm mistaken. It might have been someone else. And if it was not you and it was someone else, I'm sorry. But those are the two people that come to mind because I know they're on their shit a lot. So shout out to those two guys, Razik and Yuns. If you were the ones that cashed out on this trade, then all the props to you. You walked away with those 70 pips. But anyways, this has been a one long ass video. And I know you guys are probably tired of hearing my voice already. So I'm going to wrap it up right here. But again, this is the 4th episode. We're going to be coming out with these weekly. If you guys have any questions, be sure to shoot me a DM. I'll be happy to answer them. If you need anything specific in this video going into next week, please let me know before and I will get that in the video. But again, I don't want to have this video going on too long. I'm pretty sure it's over 30 minutes. It is what it is. This is a nice way to end off the week and going into Sunday, getting in the right mindset for trading. But I'll wish you guys all the hard work. You guys keep working hard. You can be making a lot of money in the next coming weeks. But with that said, I want you guys to take care, peace, and enjoy your weekend.